Let's bring in a panel here. Gil Luria, D.A. Davidson, Senior Software Analyst. There's a neutral rating on the stock. Dan Ives, Wedbush Securities Analyst. Of course, our viewers well know he likes Apple, has a price target of $250. And Dan, just give me your quick take on sort of this reported move out of autos. We've been waiting and waiting. Not that we ever thought we'd actually see a car. And potentially taking some of those resources and putting them into generative AI efforts.
Yeah, they had ripped the Band-Aid off. I mean, it was clear this was putting good money after bad. Investors want to see them focused all in on AI. So I think this was something, it's been a painful period going through in terms of starts and stops on the EV initiatives. But I think the writing was on the wall. The smart move for Cook and Cupertino, focus all in on AI. And I think it's a step forward and puts this chapter in the past.
Gil, your thoughts about the move as well?
When Apple originally tried to get into the car market, they thought that it would be a winner-takes-most market where they could get 50% margin and most of the value of the car would be in the computing platform. That was because Tesla was having such great success and it was easy to extrapolate that. As we sit here today in the EV trough of disillusionment, they see that the car market is still fragmented. Most of the value is not yet in the compute. They can't get to 50% margins there. So they're stepping back and investing in AI, which has far more potential for them, especially in the next few years.
Do we have any sense, Dan, of how much capital they put forward for this endeavor over the years?
Oh, I mean, it's billions. It could potentially be up to 8 to 10 billion in terms of what they've actually spent. Now, look, for Apple, they've been there before where they've spent for products that never actually left Apple Park. Look, this was an initiative that Cook and I think within Apple, they thought it was eventually going to launch. But as Gil talked about, writing was on the wall. And it's out right now, and they'll talk about it the shareholder day. All focus on AI because as AI comes to the Apple ecosystem, that to me is the golden goose. That's where they monetize. That's the focus.
And you've been talking about that, of course, Dan. We haven't really seen any true evidence of it. You expect that towards the second half of this year, right? That we're going to actually start to see something when it comes to this effort.
Yeah, it's two components. One is the App Store, the AI App Store. I think they'll start talking about that at WWDC in June, and that's going to be a separate App Store for AI. And then the big one's going to be incorporating AI into iPhone 16. And I think that combo speaks to now what you're seeing across the board in Cupertino, all hands on deck when it comes to AI.
Gil, I want to get back to the shareholder meeting, the annual meeting. You say that there should be a focus perhaps on capital return. Why?
Apple can return a lot more cash than it is right now. Right now, we're talking about maybe 0.5% dividend yield and maybe 2.5% of the market cap that they bought back. They have far more cash flow, far more cash. While they're growing low single digits, they should be returning more cash. And then I want to build on what Dan said about AI. What we need to hear from them isn't just incremental things like photo touch-ups and autocomplete and text. What we want to hear is about an assistant. I want to be able to say, hey, Apple Assistant, book me a restaurant tomorrow night with my boys near the concert venue at around 7 o'clock. And it can do that. And Apple is uniquely positioned to do that. And to Dan's point, it needs to be tied to the iPhone 16. If that can run on previous versions of the iPhone, it'll be hard for them to get a big upgrade cycle from iPhone 16. So those are the kinds of things we're going to be looking for.